Good morning, everyone. Welcome to the Stock Market Morning Prep video for Thursday, May 14th. Well, we had a very quiet trading session. You can see this in a 5-minute chart of the spiders. I mean, absolutely nothing going on. We did have a pop-up early in the morning. We had retail sales numbers come out, and they were dismal. They were very bad, and a lot of people blaming the weather, of course. But that should revise GDP numbers coming into next month. So that could put a negative print in GDP. So things aren't really that rosy. And a lot of the market participants and analysts are actually stunned why no one's actually spending. Remember, guys, the consumer is the heartbeat of America. And without the consumer, if they don't spend, I think this market could be really in trouble. Now, not saying the doom and gloom. The uptrend remains intact, especially on a weekly chart. Daily chart, we've just been in a range, and I'm going to show that to you again. As you can see when we get into the charts, I've been showing that to you. We've been range bound since early November. I do see some cracks in the walls, if you will. Transports look ugly. They look really, really bad. And the IWMs aren't looking so great either, which is the Russell 2000. Now, if we can get a break out of this range, and let me show that to you in the spiders. You can get a break out of this range here in this ascending triangle, and we have the XLF, which is the banks, starting to break out. Then I think we might have another big push to the upside. Now remember, markets are made to fool the masses here. So I think, and again, just an opinion, nothing actionable, but I think that if the banks and financials can break out, right, bonds continue to sell off, money will flow, rotate back into equities, push this market higher, and then I think you might have a small local top in place where we would be able to short the market, at least for the short term. And then I think that would be it, and I think the markets, again, start making new highs going into the end of the year. That's the longer-term forecast. Let's stick with something in a real short term. Futures are up today, 1275 on a bad reading of retail sales. So it seems to me that market participants are assuming that the Fed will not raise rates in June because the numbers are so bad, and they will continue aggressively with their QE program. Now, obviously, that's just hindsight here. Let's see what price action tells us, and then we'll take it from there, okay? So anyway, XLF, you can see the banks here. I do like the banks and financial. I think they're a little bit overstretched now on some of the bigger banks. You can look at some of the regionals look really nice here. Some of the regional banks look pretty good. Keep an eye on them. That's going to be a good point, a good key, a good cue for the markets to actually move higher if we can get the banks and financial to participate. Remember, they haven't done anything this year as of yet, okay? Now, let's take a look at spiders. You can see this ascending triangle. Again, getting closer to the apex. Pressure is building. Look at the Bollinger Band starting to curl in. They're starting to tighten as well. So we really need to see a breakout for new order flow, new money to come in and push this market higher, and or a breakdown where we'd have selling pressure come in into this market. And again, the target would be that 200-day moving average. IWM, same thing. Really doesn't look too great, guys. I mean, it just does not look good at all. In the IWM, as of yesterday's close, we're above the 20, the 50, excuse me, below the 20 and the 50 and above the 200. This is our secondary leader. Again, guys, two major leaders showing some lack of movement to the upside. Transports, very, very bad looking chart. Again, now we are below the 200-day moving average. Not good, and if this continues to stay here, believe me, it will not go unnoticed. So we need to really see this transport start to break up. As you can see, as you notice, the rails have been really bad. The rails yesterday really took it on the chin. Again, on low volume, but we need to see this get back above the 200-day moving average. Otherwise, I do think that transports, IWM, can and will bring this market lower. Okay. Diamonds, again, in this apex of this triangle, so we need to really see what's going to happen here and really see if this thing's going to break out or break down here. Okay. So let's see. Take this here. Let's take a look at the Qs. Last is the Qs, and again, really not much movement, guys. You could see this here. But the technology sector has been working pretty well, or at least in our favor here. So let's just see what happens. Remember, guys, technology, banks, and financials, if they start to rally, we might put a little bit of a pause here, and we can start pushing this market higher. But we do need participation from the transports and the Russell 2000, okay? Keep an eye on those two sectors, and let's see where we go from here, okay? Have a great day. I know it's kind of a dull morning call, but remember, guys, I'm not looking to sugarcoat anything. I just want to see which way this market is going to be headed. And unfortunately, we need to be patient and just keep watching these key indicators and key sectors, okay? Have a great day, and we'll speak to you tomorrow. Take care, everybody.